want anybody to come. We're late for this thing. Nah. Hello, sorry, a bit late this time around. A bit late. Sorry about that. Um, yeah. So how's everyone doing? Hope, hope your day was good. Welcome to the last day of the 3 week program. And yeah, so I don't know. We just came online. I just started live now. So I'll just wait for maybe 2 minutes or so so that some others, maybe one or two people can join. And I'll just announce it. Okay. Mm. Alright. 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 Yeah. Yeah. Alright. So I guess maybe the rest would join as we continue. So let me share my screen now. Let me share my screen. Maybe the rest will, as we continue, they will probably join up, right? So yeah, please, if you can see my screen, if you can see my screen, I don't want you to type one in the chat box. If you can see my screen, if you can hear me too, I want you to type one in the chat box. If you can see my screen and if you can hear me, please type one in the chat box. Alright. I see Prissy, you can hear me, you can see my screen. Alright. Daniel. Daniel, I don't know if you can hear me. You see my screen. Daniel. Alright. 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 Bless. Everybody, you all two can see my screen. You can hear me very properly. So, yesterday we stopped at picking out directional biases for trading, like understanding the direction where the market is actually intending on going. And remember, today I said we'll talk about our entries, how we actually will enter trades and how we can be able to enter our trades successfully and the right levels to trade off from. Right, so that's what we'll be looking at today. So it's recording so that the people that are not available now can watch the record after we're done. Yeah. So yeah. So now I want you to understand that there is a way the market moves, right? For example, we are in a bullish market. The market creates higher highs, higher highs, and higher lows, right? Now, we want to be buying at the lowest point of the market. We cannot be buying price when price is up. It will make sense. We want to be buying when price is at the lowest point possible, somewhere here, creating a higher low to buy for it to create a higher high. So we don't buy at a higher high, we buy at a higher low. That's the lowest point of the market. Now, usually in the dynamic of the market is meant to take money away from you, not give you money. So, in the term in our forex trading term, we call it liquidate you. The market is meant to create liquidity for people that feel that price should buy from this level and people that are buying from a particular level, right? You buy from a particular level, maybe you buy from this bottom. What the market tends to do is that the market tends to come back to your order and break below it, breaking you and taking out your stop loss. Now, that is what the market always tends to do. Now, in that essence, this level where you bought from, let's say this level where you bought from is liquidity or your inducement, where the market is trying to tell you that, okay, this is where it wants you to buy, or this is where it's trying to entice people, induce people to buy, whereby this area is a false zone for buys. That's what we call our inducement. It's just trying to induce buyers to thinking to buy. Then price, after taking you out, builds enough momentum for the real bullish move to the upside. Do you understand? So now the problem for most traders is the inability to spot this inducement level. That's the problem for most traders when it comes to entries. But I'll break it down to you of what it actually means. So now we understand that every higher low price creates, there is an obvious order block at that or at those levels waiting to be filled. There are other blocks here, other blocks here. Very simple. That is how the dynamic of the market is. Every higher low, you will see other blocks at those levels. Now, those other blocks are where people place trade, people, high level individuals, companies tend to buy or sell the market depending on the trend of the market. So you have a bearish order block and a bullish order block, right? So now we are looking at in the case of a bullish order block, right? Okay, yeah. So now remember what I said about the order block. A order block is the first, a bullish order block is the first red candle, or no, sorry, the last red candle to form before the break or the break of structure or change of character. You understand? A bullish order block is the last red candle to form before a break of structure or a change of character. That is what a bullish order block is. So remember, it must break structure or it must cause a change of character. Do you understand what I'm saying? Now, the inducement that I'm talking about, the inducement whereby it lures people to buy, to thinking that buy should happen, is the first retracement after the break of structure or change of character. I don't know if you understand. The inducement is the first retracement after we see a break of structure and a change of character. That is, if we have a market moving in this direction, creating higher highs, higher lows, higher highs, higher lows, higher highs, higher. It wants to create a. Remember, I said we always buy from a higher low. So, so now let's say that we have our area of interest at an order block at this level. This is where I want to buy from. Now, the only time that this area will be valid is if we see an inducement level at this area before it taps on this zone. That is, remember what I said, an inducement is the first retracement pullback after a break of structure. So we have a break of structure at this point, right? This is a break of structure. This is a break of structure, BOS, right? BOS, right? This is a break of structure. We have a break of structure at this point. Now, the first retracement should be like this, creating a support maybe at this point, then pushing back up. It can even push back to create equal highs with this one, push back to break it up. Then what happens? We see price come and break this support level, comes back here. Then our orders are filled from here and we'll take it to the upside. That is when you have had all confirmations in sync. You have had all your confirmations in sync, both your trend directional bias, your trend, you place your pending order here and take you to the upside. That's what I'm talking about. So this support here is your inducement level. That price must take out before going to the upside. Very simple. Now I'll be looking at live examples of markets and areas whereby we have seen such movements before, right? So let me show you one. So I usually clear my chart to have the classes with you, right? So now let me show you one. I'll show you this one that happened some time ago. So if you notice, we have series of price is in a downtrend at this level, creating higher highs, creating higher lows and lower lows, right? So we see that there is a break of structure here. Price broke structure here. Price broke structure here. Then let's wait for a break of structure again. Let's see what entries. So we can notice that there was a break of structure at this point. Right, look at the break of structure here. This is a break of structure happened here. Now we have a bullish, a bearish order block. Sorry, forgive me. A bearish order block at this point. This is a bearish order block, right? This area is a bearish order block. So now what do we notice? That after the break of structure, we have a certain pullback. Yeah. Now this pullback, after this pullback, price started retracing to the upside. Price never came to our order block here. This is our order block where price never came here. So we have this pullback here. Then let's replay what market does. Market create after this pullback, market creates another break of structure from here. Market broke this structure, yeah. After breaking this structure, yeah. So now what happens? This area here is our inducement. So we expect to buy above the inducement. So what happens after seeing this? You will now place a pending order at this order block after confirming that there is an inducement close to it, and you have your appropriate order block at this level. You place your pending order. Then what happens? You wait for price to come back to that level. You see, once price came back to that level, immediately it tapped in and you're in profit. Then after your desired risk to reward ratio, usually you can target below here, target below here. Then you see what happens. Price trends all the way to your TP. Do you understand? That is example one. Let's go to another example whereby we have a breaker block. That's another block. Let's go somewhere we have a breaker block, right? So now from here, after I taught you about directional bias yesterday, so let me just do one of few things. Let me just show you why I was selling from here. So obviously there was another block at this level. Then if you go into your I was on this area here was if you go to your 4 hour time frame, you know how to plot your areas of interest. If you go to your 4 hour time frame, that level particularly was a strong level for a reversal. So after seeing your reversal confirmation, I knew that I was to be selling at that point. So now we see now we know what to be selling. We're looking for opportunities to sell. Now I can see an order block here. This is an order block region. Now, what happened to the other block region here? This is an order block. Price came, this is another block region. Price broke structure from this other block. Remember, another block must cause a break of structure or a change of character. Price broke structure from here. This is a break of structure here. Come on. Price broke structure from that other block, right? So now what we're expecting, price to bounce off from the other block and buy, but what happened? Price broke it. So now upon this break of structure, upon this break, remember what I said. Which candle broke it? This is the candle that broke it. This candle here broke this structure. Right? Remember, I was looking for sales. This is the lowest point that broke this structure. Now we're looking for the first retracement and the first pullback. So what happens? The next candle that forms, look at what happened. The next candle that formed pushed up a little. That is a retracement. It pushed up a little, then sold down. So what happens that this area here is our order block. Is our inducement, sorry. So now we have an inducement. Now, why don't we pick an order block here? Why do we pick a breaker block? Because your area of interest should be the one closest to your area of interest should be the one closest to your inducement, right? So our order block is all the way up here, while our breaker block is all the way lower below here. Why is it that? Well, now, so our where we should be picking a trade from should be the one closest to the inducement. Where is closest to the inducement? Obviously, the breaker block. So understanding that we will now be placing a pending order at this point, then targeting any recent low or any risk reward of our choice. For example, target here, target here. And now you can see price has tapped us in. So price tapped us in earlier. So price tapped us in immediately at a weak entry, at a very good entry. Now, any risk reward of your choice, I really like targeting 200 pips. So yeah, here we go. And that's it. Yeah. So I don't know if okay, so let's look at a bearish bullish example of an order block. So imagine now we are in a bullish trend at here. We have a break of structure here. We have a high. Then before this break of structure happened, right? This is a break of structure. We can see a price broke this level. Price broke an order block level at this place. This is a bearish order block, right? Price broke it, confirming a break of structure. So now after the break of this market, after the break of that structure, we have our inducement. Remember, this is the first pullback that happened. So from the first pullback, you mark it as your inducement, right? This is your inducement level. Then the area of interest closest to your inducement is your order block. This is there's an order block level here. It's an order block level here. Right? This is another block level at this point. So yeah. So what happens is that immediately price comes there, what happens? You buy because you have your inducement level, you confirmation trend, you buy to the upside. Same as over here, same as I'm trying to look for you really see there is mostly breaker blocks the market has been giving us lately. Market has really given us a order block bullish entry. So you understand? So I don't know if there were any questions. That's simply how liquidity works and how to buy on liquidity. I don't know if there are any questions. Uh, if you learned something new, just type one in the chat box. If you learned something new, just type one in the chat box. If something new you learned today, just type one in the chat box. All right. And I hope we all learned something new. I hope we all learned something new today. Remember, my DMs are always free and available. You can DM me if any questions you have. I will always be there to answer you. Right? I will share the recording of this video to the group before the end of the week. Ah, I'll share the recording of this video by the end of the week to you guys. So you just look at how I traded, how in this video I explained about liquidity and entry. So you just look of so if there are any questions, remember you can DM me. I'm free and available to answer you. Yeah. So yeah, I'll stop sharing now. Stop sharing now and yeah. Thank you guys for coming. Can you explain? Okay, can you explain breaker block again? Okay, okay. Before we go, let me quickly explain this breaker block again for Daniel. Alright, I'm coming. Let me quickly explain breaker block. Breaker block is very simple. Imagine you have an order block that you should buy from. You want to buy from another block. Now, that other block that you're supposed to buy from breaks. It does not buy from it. It breaks below your order block. That once it breaks, what you should be expecting that it should come back as a retracement to that order block and sell from it. The same vice versa for a bearish order block. When you have a bearish order block, you're expecting price to sell from that order block. Now, once it does not sell from the order block, once it doesn't sell from the other block, once it breaks the other block, what happens? It comes as a retracement to that level. Once that retracement to that level, it has changed it to a breaker block. That is what it is. That's how it is. Do you understand? That's what a breaker block implies. It's just when you have a bearish or a bullish order block that does not hold. If, for example, a bullish order block, it's supposed to buy from when it touches the bullish order block. But instead of buying from that level, it breaks below that level. Then what happens? It comes as a retracement. So that retracement is signifying that that bullish order block has turned to a bullish breaker or a bearish breaker block. Do you understand? That's what a breaker block simplifies. That's what it means. Yeah. I hope I've answered your question. I hope I've answered your question. I hope I have. All right. Thank you so much. So remember, I would,
Hey,
yeah. So I was going on.
like, yeah, do you like? I wanted to ask something. Do
All
you
right.
mind if you can share, maybe, I don't know, what strategy do you usually use? Like, I know, because I know maybe CRT or the normal, this one you've been explaining for us, the other block, breaker block stuff, or do you do ICT? Like, if you could just explain anyone, like, between these three I just mentioned.
If I can explain anyone you just mentioned.
Like, I don't know, yes, like, which of, do you use any of them? And like, if you could, yes,
Okay,
explain it, like, that kind of.
I use basically what I use is a combination of um I would say experience knowledge or back tested knowledge, repetition, and SMC too. Because I use point based action. In my strategy is called a point based action. That is, it involves liquidity. It involves liquidity, order block, or it involves liquidity, order block, and breaker block. So what the point based action means is that okay, there's a particular point whereby you're buying from. You understand? There's a particular area you're buying from. That is your particular point you're buying from or you're selling from. That's your point based. So now that point based action is supported by your liquidity. It's supported by the inducements that are formed before it taps on your area of interest. Do you understand? Then from experience, I'll be able to develop some kind of observation from the market that has been on a repetitive pattern. I don't know if you had attended earlier. I broke down how I usually enter the trade. If you attended this class earlier, I broke down how I enter the trade physically because what I talked about for some days were just introduction to market structure. The first day was introduction to market structure. Yesterday was directional bias. Today is when I talked about how I actually enter, how I enter based on my point of interest based on the inducement. So I was remember this was a recording, so I'll send you the recording. You understand? I'll send you the recording so you look at it. What you're asking now is what I actually dealt with today. So just watch the recording. If there is any question you have again, I don't you have my details, just DM me, then I'll be willing to answer. If you want one-on-one live sessions, we can even have it together. You understand? So I want you to actually understand it. While I'm building profitable traders, I want you to actually understand it very well. You understand? So
Yeah.
I'm open to anybody's questions right now.
Where are you going to send the recording? On Telegram?
I'm going to send it to on Telegram before the end of the week. I'm going to send it to Telegram. I'll just compile everything and send it to Telegram.
Okay, okay. Nice.
All right. I don't know if there's any other contribution or questions. It was a nice 3 days program. I really appreciated everyone that came all through. Really appreciate you guys very much. You guys supported me.
Yeah,
You guys supported me.
appreciate you.
Yeah. Thank you so much. Thank you so much. So I'll just end the call now and I'll send you the recording hopefully before the week ends. Hopefully tomorrow, Seth, I'll just gather all the recordings and send. Yeah.
Yeah.
All right.
No problem.
Yeah. Bless everyone. Good night. Have a nice night.